Are you someone who's struggling to get consistent trading results using VWAP? Don't worry, because you're not the only one who's facing this problem. Many courses and YouTube videos, they concentrate exclusively on the use of VWAP as a directional indicator or some kind of key level. However, this tool has so much more potential that is often missed. VWAP can actually enhance your trading edge in 3 distinct ways. In this completely free course, you'll gain valuable insights into why all my fellow Eastern Europeans, repeat after me, why VWAP is relevant, even if it's not a crucial component of my market stalkers method. Sorry about that. But since we now have over 7,000 people on my various courses, a lot of you use VWAP. So I felt the need to create something that will benefit the entire trading community. Utilizing VWAP can help you make smarter trading decisions. So join me for this overview of VWAP's multiple benefits, and let's discover how we can use this tool in different ways to start improving your results immediately. Now, first off, what is VWAP and why should you care? Think of VWAP as a moving average, but a lot better, because it not only takes the average price over a certain period of time, but it also adds the amount of volume traded. As such, it can be a very useful supportive factor in your analysis. But a word of warning, simply trading through VWAP alone is not going to give you the full narrative. But, we're going to talk about that in just a minute. In this lecture, I will go over using VWAP as a key level. It is probably the most familiar VWAP strategy out there. Key level in any trading context will represent a price where you can expect either a reversal or a break through the level. Think of any orientation level as a line in the sand. For my programmers out there, one good way to start thinking about orientation levels is through conditional logic. If this happens, we go long. If else, we go short. Obviously, it's not quite that simple because sometimes we can have conflicting data, which is another reason not to rely on any single price point for your trading. But the gist is that this sort of binary thinking is how every trader should learn to control their actions to the best of their ability. What we don't want is for you to continue to click buttons like a wild man or woman when things don't go according to plan. I call that the grasshoppering. We're going to have a look at some examples of using VWAP as a key level. The first thing to adjust for is the type of product that you're trading. Typically, single stocks and equity indices tend to have a much bigger reliance on VWAP as a key level, unlike some other products, namely crude oil and gold futures, which happen to be my main markets. That's not to say that VWAP won't be useful for my products, but it's just that the stuff that I trade, they tend to have a higher incidence of neutral days, meaning days without a single direction, and they tend to have a lot of V-shaped reversals. So VWAP will mostly end up in the middle of that range. So it's not a good idea to use it as a key level on a day like that. But stocks and indices, they do quite well with VWAP. Now let's take a chart of mini DAX. Here is my VWAP. I also have some standard deviation bands displayed, which I'm going to explain in the next lecture. The indicator that I'm using here is Blahtech VWAP on AMP Futures Metatrader 5. Through AMP Metatrader, I am able to trade genuine futures contracts. This is CQG data, right? So on AMP Futures MT5, you get real-time futures data for free, even on demo. Demo lasts for 30 days, but the point being it's free and you can practice your trading skills without jeopardizing your savings. I'm going to put some links down below this video so that you can check out all of this yourself, because this is actually one of my frequently asked questions. What indicators are you using and where can we get them? But anyway, you can see that the price is actually above VWAP here. So the idea of using VWAP as a key level, you would look for the price to move back towards VWAP, and then you would look for some sort of a reversal to enter the trade. Now, on its own, VWAP can be a decent tool, but it becomes incredibly powerful when you pair it with some sort of an institutional order flow concept. So here I can actually see that there is a demand level that was created earlier at the start of the official trading. So personally, I would actually look for the price not only to test VWAP, but also to sort of touch this area here. I call these conterminous lines. Conterminous means to share a common boundary. So whenever the price turns around, there is a common consolidation price at one point before this market makes a move higher to change the direction. And this is usually my price of interest, especially on some slower days. Whenever I get a stack level like this, VWAP in the vicinity of a conterminous line, to me it can be actually a strong setup. But that's a part of my market stalkers method. To simplify things, you would effectively just whack in a limit order around the VWAP area and then place a stop loss some, let's say 30 ticks below. And then also place a target at a nice viable 2.4R multiples, where 1R represents initial risk on this trade. So therefore you want to aim for multiples of R. Within reason, obviously, since we are talking intraday trading. If you're aiming for a bazillion R intraday, that is very unrealistic. I mean, you will be looking at price events that only really happen about 35% of the time, if we take some longer sample sizes into consideration of, let's say, about a year or two. But for intraday trading, a pretty decent viable target is anywhere from 1.5 up to 3R. Now let's have a look at another chart. Here's a chart of ES, S&P 500 index futures. So here's the VWAP. Now, thinking about using it as a directional indicator. By the way, I'm using a 30-minute chart here. Now you can take this behavior in a couple of ways. What I can see here is that for now, every time somebody attempts to sell this, it is quickly bought to create like this pin bar. So if you were to use VWAP as a sole directional indicator, maybe you can take this pin bar closing above VWAP as a potential signal for your long trade, meaning the price could go higher. Now, generally testing VWAP is something that equities do quite a lot. Equities tend to have this upward bias because of the nature of what they are, especially when we're talking indices of some of the most successful, largest economies in the world. So if you go back in time, you will see that indices of this sort have very, very few periods when they just keep going down. Only when we have like a semi-apocalypse threatening the world, they might go down for a while. But even during something like a COVID outbreak, which was a black swan event, we only had a relatively brief period of stocks going down before they recovered, and then some. However, like I said before, we are talking about intraday trading here, and I'm not interested in holding positions any longer than about a couple of hours. But one thing that I always like to point out in all of my teachings, especially when we're talking about amplifying a person's performance, is not to just identify a potential setup and just kind of like, well, that's it, now we walk away. But also I like to point out the challenges that come with it. So here's some of the drawbacks of relying too heavily on VWAP alone in your trading. First and foremost, it's always paramount to consider the market context. Using VWAP alone won't really be able to give you that context. You will have very limited information. And over-reliance on VWAP as a directional indicator and or a key level, it can actually become a big issue because this strategy tends to be most effective on days with strong momentum. However, if you've traded for any length of time, you'll be aware that the days of that supercharged price movement occurring without any interruption, they're actually few and far between, even in equities. So to compare some statistical data on these events, on how often you get a trending day in equities versus in crude oil, and actually crude oil does a little bit better, believe it or not. Here's some statistical analysis. It's the stuff that I like to do. I'm a nerd, we all know that. So let's start from the first column. Here we have limited auction days, then it says neutral days, and then it says trending days. We also have non-trend days and asymmetrical neutral days. We're not going to touch those. For now, you will only need to look at these first three parts. The way I define these, I use the first hour of any active trading, whether that's London or New York Stock Exchange or NYMEX or COMEX, depending on the product, obviously. But I will be looking at where the price ends up at the end of the day in relation to the first hour trading range. So if the market breaks out and keeps going in one direction, that constitutes a trending day. And then whether at the end of the session we ended up away from it, indicating a trending day, or whether we're still inside it, indicating a more neutral day or a limited trend, limited auction day. So that's what these three first areas represent. The blue bar is GC, red bar is CL, the green bar is YM. So gold futures, crude oil futures, and Dow Jones futures. Now, if you're somebody who doesn't really do stats and you don't really know how it works, you'll be thinking, well, if this third area is trending days, surely they happen most often. Not quite, because if you take the number of days when you have the limited auction days, and then a lot of those actually end up turning into a neutral day through the course of that session, these two vastly outnumber the trending days. For example, in percentages, if you take crude oil, and I'm only taking 1 year here as a sample size, but this relationship is remarkably stable throughout many years going back, even during COVID, okay? The ranges were massive during COVID lockdowns, but we still had the same kind of day types and same occurrence of day types. It's just that it was happening at a much larger scale. So the trending days in crude oil actually comprise about 35% of all observable days. But when I lump in neutral and limited auction days, we actually come to a whopping 55% of having either a limited auction or a neutral day. Now gold, out of all of these, actually trends probably the most often at 42%, but it too has 56% of the days when it doesn't have a trend. It just wags around that first hour of the trading range. So what does this mean? It means that trending days are actually not the norm. Therefore, if you're constantly attempting to chase the big days and you're attempting to use VWAP as a directional indicator, what's going to happen on about 55% of the days, so more than half of your trading time in a year, is that you're going to get a neutral day where VWAP is actually located in the middle of the entire session. So now you know that you may have a lot more ranging neutral rotational days, as I like to call them, and they can completely decimate your account if you attempt to use VWAP as a key level. So you really have to learn to diversify your strategy rather than to always look for some crazy trending momentum. Now, what do I mean by rotational days? So let's take a look at the ES chart that I showed you earlier. Now you remember seeing this pin bar, right? But even though you got the pin bar closing above the VWAP, further upside momentum was actually pretty limited. But if you combine the auction theory with VWAP, you'll notice that the price didn't actually break above that first hour of the trading range that I was talking about earlier, meaning that it's very unlikely that you will get some significant crazy upside momentum. So rather than me expecting continued upside, I will actually be looking to fade any upside attempted move. So keep this in mind, and I will see you guys in the next lesson.